Let's get some more perspective from one of Bloomberg's top-ranked analysts on the Australian banking industry. He's Brett Mesurier. He's from BBY. Brett, thank you very much indeed for joining us. Well, what did you make of today's report then?
Well, basically it goes over the major issues that banks are confronting, which of course goes to funding costs, the wholesale funding costs. While they've been elevated for quite some time, in the most recent times is just showing a little bit of reduction, which is good news for the banks. But of course, overall, when we go back a few years, those wholesale funding costs have increased an enormous amount, which has been passed on, of course, to the borrowers.
Well, Wayne Swan's not very happy with this. He's called on many of the customers to switch banks because of this practice. Have you seen any evidence of that happening?
No, in fact it's rather pointless because all banks are in the same position. There is no real value added by changing banks at the moment unless you've got specific concerns with individual banks, but they all are experiencing elevated wholesale funding costs and they all have to achieve a reasonable return on equity. Otherwise it just exacerbates the problem. Because if their return on equity started to fall materially, then they're likely to be downgraded and the funding costs would increase even more. And so the problem would be circular and it would be deteriorating.
So really at the moment what we have is a situation where they are, well, caught between a rock and a hard place. Now, what about the RBA itself? What does it make of this? The Reserve Bank can't be happy because, of course, monetary policy is one of its key ways of managing the economy.
Yes, and it's got no choice in this now because over the last 20 years our major banks have borrowed between them about $400 billion in term wholesale funding from offshore. They necessarily were losing some control. If they wanted to avoid this situation, then obviously they had to, many years ago, stop the wholesale funding that was being carried on offshore. So there's nothing they can do about it. They are basically in the hands of the wholesale markets for a substantial part now of monetary policy, and that's just the way it is, and I'm sure they take that into their thinking.
Okay, which of the banks you think are in the best position, and indeed the ones which you think are in the most precarious position?
Well, if we're thinking about wholesale funding, then the one that is in the best position is Commonwealth Bank. It has the highest proportion of domestic deposits. On the flip side, the one that has the greatest reliance on wholesale funding offshore is Westpac. But of course life's not that simple because you've also got differences in asset quality. Westpac has, with Commonwealth Bank, the best asset quality of the major banks, with ANZ and NAB bringing up the rear. So you actually don't necessarily get a leader in all departments, although when you put it all together, Commonwealth Bank does look the best on a consistent basis, and it has built that position up over a long period of time.
In your view, do you think there needs to be more consolidation in the banking industry there in Australia? Would that help?
If wholesale funding costs do not fall materially, then regional banks are in for a ongoing very tough time, because their wholesale funding costs are greater, of course, than the major banks, and they rely more on securitisation, which of course has been supported by Australian Treasury. And if that support disappears, then they are totally reliant then on improvement in wholesale funding markets and their own deposit base. They're the ones who are really in the squeeze at the moment.
Brett, thank you so much for joining us. Brett Mesurier.